Hello, everyone, and welcome to The Buck Stops Here. I'm Catherine Murray. Well, today we have the pleasure of speaking with a very tenured gold mining CEO in Canada, Sean Boyd. He's the CEO of Agnico Eagle, which just completed a very large transaction. Now the company is the third largest gold mining company in the world and third largest market cap company. I want to bring him in right now. Sean, great to be able to speak with you and get caught up. There's a lot to discuss here, so welcome. Thank you for joining us.
Yeah, nice to be here.
Thank you. We're going to get to the company specifics in a moment, but I really first want to get your big picture perspective for our viewers in terms of looking at where we are in COVID during the pandemic, the impact that that's had on businesses around the world from your perspective, and importantly, where are we now in the potential recovery? What do you think?
Well, there's a few moving parts. I think the challenge initially was just to try to understand what was happening and deal with the uncertainty and really as it impacted the employees. And I think companies in general have done a fairly good job of managing through the initial stages. But then it was to ensure that the businesses were properly positioned, knowing that things were still going to be uncertain. So from our particular perspective, it was really about continuing to make the case that mining was an essential business, given the location of the assets and the economic benefit that was conferred with those assets in those communities, but also at the same time, ensuring that the employees felt comfortable and were safe. And one of the things that we did early on before many companies is we employed our own testing. We had testing labs up and running in April of last year. So I think companies learned a lot about themselves and how they could deal quickly with that uncertainty. The other aspect that we did very early on is, given the risk of COVID in Nunavut and within the Inuit communities, we sent our Inuit workforce home in March of last year. And only it's been recently in the last couple of months, we've been able to get them back. So we had to adapt like all companies. Where are we now? Well, we just came off record production. So even through that uncertainty, once we got over how we were going to manage it, we were still able to run the business and run it at record levels. Going forward, there's still uncertainty with the new variants. You hear a lot of headlines. This vaccine will be good, that one may not be good. I think this still goes for another few months in terms of that uncertainty, but companies have adapted extremely well to the uncertainty and positioned their business as well.
It's almost surprising to see how well companies, and maybe we need to give credit to the CEOs of some of these great companies, that they have been able to adapt. As difficult as it's been with supply chain management and labor issues, my goodness, we're still, moving along. What do you attribute that to when you really sit back and think about colleagues in your industry or others?
For us, and I think it would apply to most companies, the word we used was trust. And I think at the start, senior managers, employees, board members, no one really had a roadmap for this. And what we were saying to our communities, partners, the governments, in terms of whether mining was essential or not, the employees, also the employees' families, because the families had to be comfortable. Look, trust us. We're going to look after you. We're going to do the right thing. That's of primary importance. And it was the trust that allowed companies to manage through that uncertainty.
And what, just to go back for a moment, in terms of saying that you're an essential service, what was the base case for that? And what was the government's response?
Well, it was really in two instances. We had 8 mines running at the time of COVID onset. And at one point we had 1 mine running, and that was in Finland. So we had the Quebec government decide that mining was non-essential, although Ontario said it was essential. We don't have mines in Ontario. And the Mexican government said mining was not essential. Well, those were just governments trying to deal as well with the uncertainty. And I think it was really a 2-pronged effort to basically say, look at the testing we now have in place. Our employees are comfortable. We can protect our employees. In Nunavut, we've sent the workforce home. We've created the conditions to continue to operate. And by the way, we have a business that has, in terms of Canada, over 6,000 high-paying jobs in parts of the country which need economic activity and economic wealth creation. And that argument, as we went through a few weeks, started to resonate at the government level, and we were congratulated as we went through COVID on how we managed issues around testing and around our Inuit workforce.
All right, we'll pick it up on that point right after the break. And we are back with Sean Boyd, the CEO of Agnico Eagle. Sean, I just want to pick it up. You mentioned a really important point in terms of why your business is essential. All of the jobs that are associated with your mines and how that impacts Canada and Canadians. I think it's so key and critical, that you really, like I'm sure many companies went to bat for your employees to say, we need to be open. We can be open. We've put the parameters in place. Talk to us a little bit more about what you're seeing now on the economic front in Canada.
Well, I think just making that argument, it wasn't just the fact that we had a lot of high-paying jobs. It was also the fact that we were extremely profitable, and as a result, paying taxes. And we were actually eligible to take a wage supplement program to the tune of about $21 million, and we didn't take it. We didn't apply.
Wow.
Although we made the criteria because we had a number of our mines shut down, and we felt, why should we take it when we're generating record production? So in that case, when you think about the positioning, it was, we have a strong business, allow us to continue to operate as long as we're safe, and our workers feel comfortable going to work. In terms of the big context, resources in Canada play an important part, particularly in certain parts of the country. And that's the other argument. And so going forward from an opportunity set perspective, we need all parts of the economy moving and taking advantage of their opportunities because we have massive budget deficits now. And so now it's about working through the last parts of COVID, hopefully, and getting the economy kickstarted. And from a Canadian perspective, what we see is tremendous opportunity, particularly in Canada's north. And we've got a particular skill set, having been there for a number of years, having built 3 mines, having developed close partnerships in the communities and with our Inuit partners. We think that's a great opportunity as the government lays out a strategy for creating an economy in Canada's north. Now, part of that economy will naturally be focused on resource development. So we think the government should broaden it beyond resources, but I think resources are going to play an important part of how that economy gets kickstarted. And then Nunavut's kind of an interesting place because when Nunavut was created, the residents of Nunavut actually own 18% of the land mass of Nunavut. So they're in the resource development business because they selected that 18% based on the geological potential of that ground. And that's what creates the opportunity. You've got willing partners on both sides. So we've been upfront and doing speeches on the need for the government, the federal government, to have a strategy in the Arctic to develop assets there. And we were involved in an acquisition earlier this year when the government basically said to a Chinese-controlled entity, you can't buy the Hope Bay project. And Agnico stepped in and we now own it. And that's this argument from a Canadian perspective. We think as Canadians that it kind of makes sense to have the critical resources that exist in Canada developed by companies based in Canada, run by Canadians, working with Canadian partners to develop those resources.
Right. And, it's interesting because, well, with the acquisition of Kirkland, it's increased the size and scale and scope of your company and creating an even larger Canadian company, which, to your point, is so key and critical. We almost haven't seen a lot of mergers and acquisitions over the past number of years in our resource sector, and I think that maybe on the energy front we will start to see that. If we went back a number of years ago, it was more foreigners trying to buy Canadian companies. So talk to us a little bit about, when you think about it, why this is actually so important in the Canadian companies that we've kind of lost to the sidelines.
Yeah, you're right. Canadians have a long history of leadership in mining, and we've actually, over the years, I've been at Agnico for 37 years. There's a table in my office just in front of me here that there's 6 chairs around it. That was Agnico's boardroom table. I first sat on one of those chairs in 1983 as an auditor for Ernst & Young. So I have a lot of perspective, and I've seen companies come and go. Alcan, Falconbridge, Noranda, Inco. And so there's been a hollowing out, Goldcorp more recently. And so there are top-notch geologists, engineers, metallurgists in Canada. What we've been able to do with Kirkland Lake, join with our partners at Kirkland Lake to create a Canadian champion. Agnico is already the largest producer in gold in Canada. This only magnifies that. And what's important about this merger is it actually creates a low-risk, higher quality gold mining business that has all the skills and can develop assets in Canada's far north, can develop assets in Quebec and Ontario in the Abitibi region. We've got a business in northern Finland, in Mexico.
Sean, I just want to pick it up on the Kirkland acquisition, which is obviously a large deal and positions your company to be one of the largest producers in the world. But talk to us a little bit about like the strategic rationale, other than what I just said, and the timing of it too. Some of the analyst reports are questioning the timing.
Yeah, I think the timing, there's never a perfect time to do these deals. If you look at the background to the deal in the circular that went out to the shareholders prior to the successful vote, it lays out a series of discussions that began a couple of years ago, looking at the possibility, even whether it made sense at the time, to put two high quality businesses together rather than do what's traditionally done in the mining space is somebody pays a big premium to buy something to fix an issue. This was something where both companies did not have to do this, but they looked at it and said, this kind of makes a lot of sense because we keep it a low risk, very manageable business, but we actually strengthen the platform. And the industrial logic is we're unleashing a lot of synergies based on the concept of regional consolidation. So we both took the view that the industry will consolidate. It's one part of the resource space that's still fragmented. There's too many players relative to the number of high quality opportunities. So what this does is creates a much stronger company with a pipeline. We can still grow this business. We can still keep the risk down, and we can unlock significant synergies of about $2 billion. So that's very important. It came together at the right time because when we started to talk about it in more detail in 2020, that's when COVID came into play because we physically could not get around and have both sets of teams get around and look at the assets. We were able to do that when we re-engaged in June of this year. We re-engaged on the basis that we could now get around and look at the assets. So that's part of the timing. So looking forward, this should close in the first quarter of 2022. And then it's just a matter now of putting in the plans and executing on the strategic rationale, industrial logic of unleashing the synergies, but also to create a very strong longer term platform in an industry that's not easy, as many people know.
So it's interesting because you talk about the opportunities that it sounds like are quite immense, but it's also not an easy industry to manage. What are the opportunities? What are the demand drivers for your business these days? And I want to also bring in, the conversations we're having about inflation moving higher, gold being used as a inflation hedge, but then of course people are now maybe moving more to cryptocurrencies. So what's the, almost the fundamentals of your business? We almost have to remind ourselves of what they are today.
Well, the fundamentals are, this is still a really good gold price, almost $1,800. You could see it in the Agnico's quarterly results recently in terms of cash generation based on a growing production base. So the fundamentals are strong, but the way to create value is really to discover new deposits. This combination is very focused on exploration. Both companies individually have very large exploration budgets. They have a history of discovery. They have a history of being focused on having those discoveries drive per share value. So that doesn't change. It just broadens the platform going forward. But again, getting back to this timing question, the timing's interesting because the cost curve has bottomed in the gold industry. And as we've said in our Q3 results, we're probably seeing about a 5 to 7% increase in our inputs of consumables, not on labor, but of consumables, which is about half the cost base. And so it's interesting that we put these businesses together, high quality business together now, where there's synergies available to us, which could help mitigate the impact of what we see as increasing costs around input. So I think the timing of that is important, but the opportunity is really around risk. So when investors look at the gold space, they look at ways that they can get exposure to gold, but keep the risk level low. This was a large deal when you think about market cap, but when you step behind the market cap, it's really adding 3 mines to 9 mines to create 12 mines in 4 countries. That's low risk. That's a manageable business that's able to grow. That's high quality. The mines will generate, in terms of operating profit from the mines, of about $4 billion on an annual basis.
Wow.
So that's a lot of financial firepower to reinvest in the business, but also to increase returns to shareholders.
Understood. We're going to take a quick break, and when we come back, I'm going to ask you a little bit more in terms of what you're seeing on the inflation input front, whether it's transitory. We'll be right back. Sean, I do want to pick it up on the inflation front, as I mentioned, and the timing of the deal. That is quite interesting in the sense that you've got scale and you can mitigate some of these rising cost pressures. Yeah. So perfect timing, perhaps. What are you seeing on the inflation front? And, is it transitory? We've obviously seen the U.S. Federal Reserve drop that wording. What do you see? How are you explaining inflation?
Yeah, there's 2 parts to it. One from our business perspective at the sites. As we said, we're seeing our suppliers tell us that we are looking at roughly 5 to 7% increase in consumables, and we've seen that from other mining companies. So the word transitory, I think some brilliant marketer came up with a word like transitory, which softens the scary word inflation.
Yeah.
And certainly that builds into the narrative of central banks saying, look, we've got this, don't worry about it. I would worry. This is not transitory in our view. We started to sort of move into that sort of non-transitory view earlier this year, listening to first quarter conference calls of large U.S. public companies where the CEOs are saying, look, we're facing input price pressures and we're going to pass those on to the consumers. We hadn't heard that type of talk in a long, long time. I would point to something like John Deere recently with the strike in the U.S., and that resulted in an increase, double-digit increase in wages. So where have we seen in the last 10 years those types of increases in wages coming? And so that's what I think creates perception around inflation. And once perception sets in that we're going to be facing higher prices, workers are going to want more. So I don't think it's transitory. I think inflation's coming. I think the Fed's behind the curve. They may get more aggressive, but it's all about real interest rates. Mm-hmm. You can have higher interest rates, but you can also have higher inflation. And for gold, it's about real interest rates. So we think this is still a very positive environment for gold, given that we expect higher inflation and we expect continued low real interest rates.
And are you seeing, more of an interest from institutions or central bankers in their desire to own gold? I mean, I think it's maybe been put on the sidelines a little bit to the point where Singapore, the government of Singapore, apparently they increased their gold reserves by about 20%. First time apparently in a long time that they've done that. And that apparently also was slightly under the radar screen. What are you hearing?
Well, there is among institutional investors, there's still, as we've moved through the summer into the fall here, there was general indifference towards gold. And the stock market setting records, I think, helps to create that indifference. As long as other things are working really well, people are not turning to gold. But now's the time to buy gold and buy the high quality gold equities, in our view, because it's still a great business at $1,800 gold. That's not reflected in the stock prices. If gold goes up 20%, which is not out of the question, these gold equities should hit new all-time highs. And the gold equities, in a lot of cases, the high quality companies are trading at half of where they traded at last year when gold was over $2,000 for a brief period of time. So there's really good opportunity here in this space, and it will come, I think, as inflation perceptions change to, yes, it's here. How do we control it? You need to own gold.
I think I was an institutional salesperson at Deutsche Bank and Goldman Sachs. I'm assuming that your phone is going to be ringing more and more from the hedge fund community and big money managers, long only funds, I would think. Just to pick it up, one last point here on the inflation front and your expectations for growth. Do you think we will still see, though, growth on a global scale, whether it's Canada, the United States, or what have you, or do you have any concerns about stagflation?
That remains to be seen, how it all unfolds. Certainly there's been, everybody will acknowledge, massive amounts of stimulus put to work here. And that's worked. There's no doubt about it. We're seeing economies doing well, but not as well as they used to do. So this whole idea that we were going to end up with 3, 4, 5% growth like we would have seen 20 years ago as we pump more money into the system never materialized. So are we going to see 0 to 2%? It's possible. Can we still have inflation in that environment? We can. Whether it's stagflation or not, who knows? What we're looking at from a goal perspective is, from a company perspective, still grow output, manage our cost, generate more free cash flow, increase returns to shareholders. What we're seeing in big picture is we think inflation's not transitory. We will see more inflation going forward, and that tends to be a really good environment for gold.
Okay, Sean, we will leave it there. Great to see you. Thank you so much for your time.
Thank you.